Hey everybody, this is Nanook of the North. I'm telling you, we came into the studio today. Ooh, it's nice and warm in the office. You go out in that car and you drive around. Oh gosh! So if you're home by the fire, that's a great place to be. And I'm joined in studio with Chris Fabian. So we tore ourselves away from the office.
Hello, Esther.
Hey, Chris. So we want to talk about some tax mistakes that you are making that you might not even know you're making. And of course, if you have any questions, you should be getting your tax stuff in the mail now. This is the best time to call 803-0930, 803-0930, star 930 on a cell phone. And if you've been calling the IRS, you know they really are not helping you with your tax questions. And we have all of our offices open that will have people talk to you. And so if you have questions, you can get a list of our offices and their phone numbers by calling 566-11EG. And we're open 9 to 9 all next week because we know towards the end of the week. By the way, the IRS is finally open for business on the 31st.
Taking the returns.
So all the returns that we've done are at the gate, ready to go. Boom, we'll be the first people at the water cooler. So if you're somebody that wants to get your tax return done this week, it's good. So you'll be the first person that's processed.
Right. Yep.
Okay, and I know we got phone calls coming in. We usually load up quickly this time of year because it's tax time. 803-0930, 803-0930, star 930 cell phone. I want to talk about things that people miss, and one of them is missing opportunities for tax savings. A lot of people think, like for instance, I had a gentleman that came in the other day. He had a disability pension. He was 59, and all he had was $4,000 on a 1099-R. And he was a single gentleman, and so and he didn't think he had to file, no withholding.
He probably walked away with about $200 on the federal and about $50 on the state.
For 3 years.
Yep.
Because he hadn't been filing. He said, I just thought maybe could you pull a rabbit out of a hat? You see, when you retire on a disability pension between the ages of 25 and 65, because at 65 it's normal retirement age, your pension is considered wages for earned income credit, and even if you don't have children. If you have children, it's even better because the earned income credit gets larger. But you would want to file because it's not like you have to file, but you have money coming back.
Right, and they're not going to be knocking at your door. Hey, Mr. Smith, guess what? We got 3 checks for you.
So that's one of the things. The other thing is, with the tax return, there are all kinds of credits. There's the refundable American Opportunity Tax Credit, where, again, they give you money.
Yep.
Even though you didn't pay it in. The earned income credit, like I was talking about with that taxpayer, if you're between the ages of 25 and 65 and you have wages or a pension and you're considered disabled, or if you have children up to 3, you have income from wages up to $42,000. Actually, almost up to 50 now, isn't it? For the
EIC, yeah, little over 50,000.
Right, so that you get money coming back. New York State, they have child tax credits.
Yep.
People aren't even aware that the state of New York is generous with our money. Anyway, and they are sending people money back that they didn't pay in if they have a child between the ages of 3 and
16, and 3 including age 16.
Right.
Yep.
And so there's the child tax credit. If you pay daycare,
you get a refundable daycare credit on New York State.
And
yep.
on the federal, you get the 20
zero
up to 30%,
out the liability. Yep.
Right. And then pension savers credit. Again, those are things that people aren't aware of. And these can be very simple returns that you can actually leave thousands of dollars on the table. Thousands.
We say all the time how a majority of the people out there pay a negative income tax. And that's
right.
What we're talking about, the refundable credits or the credits to help zero out their tax. So they
actually don't pay it. They actually get it.
Yep.
Right?
Yep. I know I did yesterday. $14,000 in income, 3 kids, and they walked out with $12,000.
Right, I had one this morning, $11,500.
So it's unbelievable.
Right, and the other thing is, I had a lady that was a widow today, God bless her, and her husband passed away, and so he only had about $19,000 in income before he passed away. She has children, and so now she's on Social Security. And I said, have you thought of working this
Go
year?
and get a part-time job.
And she said, well, I don't know if I... And I said, look, if you make $7,000, because she has so many kids with the child tax credit and everything, I said they're going to pay you $7,000. So if you make 7, you get 7. So it's like 14,000, right? So it's not only just your tax return; it's the tax planning that goes in advance. And the other thing is, you have to be very careful who's on your tax return starting in 2014.
Right, for health insurance
That's
purposes.
right,
Because you're responsible. If you are listing, your brother on your return because he doesn't have income, well, if your brother doesn't have health insurance, guess who's going to get penalized?
you are.
You are. Yep.
So be very careful. So that's part of the tax planning aspect, because as this whole Obamacare thing rolls out, the first year the penalty is little, then it gets bigger, then bigger.
Correct.
Let's go to the phones. We're going to talk to Mike in Lockport. Hey, Mike, how can we help you?
Hey, good afternoon. Love the show.
Thank you, sir.
Wanted to call. I had a question. A little bit over 2 years ago, I purchased a home with my father. He was going through a rough time, and it was a duplex, and he was living on one side, and we were renting out the other. Things had changed over the last 2 years. We basically, fixed it up. It was in pretty rough condition. Sold it, and there was basically a profit on the house, roughly about $40,000. What I was wondering is how this is going to work out. It was finalized after the transaction in early December, before the holidays. How this is going to work in terms of capital gains? Do we split that as far as our tax return right down the middle, or do I put it all on mine, or do you have to put it all on his? Or?
Now, were you charging your dad rent?
No, I don't believe I was.
So,
I thought about doing that, but yeah, no, he was just living there.
All right, so Dad's part was his personal portion. So only half of the building was for business, correct?
Correct.
Who claimed the rental income on their tax return?
For the unit that he wasn't in, I did.
All right, so you claimed the rental income on your tax return, and your dad had the personal residence, correct?
Correct. Yes.
Okay, hang on, because we got a break, and the drum will roll, and we're going to tell you all about it on the other side. Can you hang on, Mike?
Sure,
Thanks.
absolutely.
I'm Esther Gullius, the tax lady. We're going to take a quick break. 8030930, 8030930, star 930 on a cell phone, and we'll talk taxes. Hey, I'm Esther Gullius, the tax lady, and we're talking taxes. And we got Mike in Lockport. And like Mike, we're going to make your dad really happy, but we're not going to make you so happy. Chris, why don't you jump in here?
Sure. So Mike, Dad's half, since it's his personal half, that was his half of the house, he could gain up to $250,000 tax-free. So Dad's not going to pay any taxes, okay? However, because it is a rental, you are depreciating the house, you have to recapture the depreciation, which means it reduces your tax basis. So then you have to look at what that is compared to your sale price minus the closing costs, and you're going to have to pay tax on the difference.
All right. So, like, for instance, you said that you and your dad collectively made $40,000. So that would be like $20,000 a piece. Dad's $20,000 is tax-free. Your $20,000 plus the depreciation you took. So let's say you took $5,000 in depreciation, brings it up to a $25,000 gain. That's what you're going to pay taxes on. And you recapture the accelerated depreciation as ordinary income and the long-term depreciation as a long-term capital gain on a $47.97.
Okay, and then what percentage then is it usually for the capital
Part
gain?
of it's going to be an ordinary, part of it's going to be 0 to 15%.
Okay.
Okay?
All right. Thank you very much.
Thanks, Mike. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to John in Kenmore. Hey, John, how can we help you?
Good afternoon. I had a couple questions. One was my mom passed last April, and am I still able to claim her for the whole year?
Did she live in your home?
Yes.
Was she your dependent previously?
Yeah, for many years.
And you were giving over 50% to her total support prior to her death?
Yes.
And she didn't have income over $3,900 from taxable sources?
No, not at all. She just had Social Security.
That's correct. You can still claim her.
Yeah. Okay. It doesn't matter that she.
No, and you don't prorate the exemption. It's an all or nothing kind of thing. And I'm sorry to hear about her death.
Oh, thank you. My other question is, my wife retired, as I am retired too. She's 62. I'm 65, and on the state, I was taking. You can take up to 20,000. I believe the number was for your
pension and IRA.
Correct. And does that go to 40 with her?
Okay, so neither of you are retired on a New York State or public pension, right?
Correct.
Okay, so it's up to 20 for you, up to 20 for her.
Oh, okay. Now, is it more beneficial, last question, to do when you get retired like that, to do separate returns on federal and or state?
No, It's not going to be more beneficial.
beneficial.
No, unless she or you incurred large medical expenses, and as a result because some of the income is lower on one or the other, you might be able to itemize and get a bigger medical deduction.
Yeah, but then one would have to itemize too, and if they have nothing to itemize, then
that's true. That's true. Generally speaking, John, it's not going to make, I would say 99% of the time, it does not benefit you to file separately.
Okay, thank you very much.
You're very welcome. Bye-bye. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. I know you're out there chilly and just wanting to talk taxes, so give us a call, and we're going to talk to Josie in Amherst. Hey, Josie.
Hi. How are you?
Good. What can we do for you?
I have an earned income question.
All right.
My sister worked last year and made $7,000.
Okay.
And she became disabled, so she's applying for disability.
Okay.
Her son is a full-time student, which he has been claiming. He's 23, and he earned $13,000. Can she claim him for the earned income?
Okay. One of the stipulations for the earned income credit is that you have a child that lives with you, and he's a qualifying child, but the child cannot be supporting themselves over 50%. They cannot provide over 50% of their own support. It would seem to me that unless your sister had all kinds of cash sitting on the side or loans that she was getting, that she was not contributing more to her son's support than he was. So it would seem to me that he would not be a qualifying child.
Okay, so she cannot claim earned income or claim him. She can claim him?
No, now he can claim himself, and he's also going to get the American Opportunity Tax Credit, provided he hasn't taken that for more than 4 years. So he'll either get the Lifetime Learning Credit or the American Opportunity Tax Credit. But
she has been claiming it for him for the last 4 years.
Okay, well, if it's been claimed for if this would be the 5th year of the American Opportunity Tax Credit, it has to move to the Lifetime Learning Credit.
Oh, okay.
Okay?
Okay, thank you very much.
Thanks, Josie. And, of course, the Lifetime Learning Credit does not have a refundable feature.
correct.
Right?
Right. And if it's still undergraduate, though, there would still be the New York State
Right.
$200 up to $400, depending on how much the
Right.
tuition is.
So even though you can't do the American Opportunity Tax Credit anymore because you've done it for 4 years, the state of New York still allows you, as long as it's an undergraduate student, to take the partially refundable, or could be more than refundable. Actually, some of that, what's really hard on the state of New York is you got this credit, which is potentially refundable, or maybe an itemized deduction, whichever works out better, and you have to work it out both ways.
Yeah, you know, especially if he's claiming it himself, he may be better off doing tuition and fees, because either way, he's probably not going to pay taxes to New York or to the federal. New York State, it will reduce his income, lower the tax, and he'll still be entitled to the refundable credit.
That's true. That's true. So that's one of the things you have to work it out multiple ways to see which way is the best way to skin the cat, right? 8030930, 8030930, star 930 on a cell phone. I'm Esther Gulius, the tax lady from EG Tax, joined in studio with Chris Fabian. The rest of our minions are working. We got them at the office, and we'll be rotating people in every Saturday. Oh, we're going to go to the phones and talk to Rich in Amherst. Hey, Rich.
Yeah, I'm 95. My wife's 85. A scenario: I've transferred everything I own to her in a will. She to me. Now, the deceased would have very little probate under those circumstances. Am I correct in that assumption?
If this is all going to go through a will?
Pardon me?
This is all going through your will?
Well, according to taxes. In other words, if I should die and my wife is the survivor,
Right.
then my probate, being deceased, would be very little taxed.
Well,
If
all right. First of all, let me ask you this: how
Yeah.
much is your estate worth,
About $1.5 million.
and how much is your wife's estate worth?
Well, what?
All right, yours
mine
is hers and hers.
hers.
All right. Well, first of all, there's going to be no estate taxes on the federal return because your estate taxes are too low. Regarding the probate, you need to contact an attorney because I think what you're saying may not be correct. So I'm not a probate attorney. I am a tax accountant and an enrolled agent. So what I'd suggest you do is call. Actually, you can talk to
Jeff
Dennis,
Katz?
Dennis Kitchen or Jeff
Dennis,
Katz. They're both absolutely wonderful attorneys, and they can advise you whether your plan is going to work. I think it might not, and I think you need to talk to somebody.
Uh-huh.
Okay?
All right, well, thank you for your
All right,
advice.
you're very welcome. Bye-bye. I'm Esther Goulias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Debbie in OP. Hey, Deb, how are you?
Great. Thank you. Thank you so much for your program.
Thank you.
Just have another capital gains question. My
Yeah.
husband is 66. I'm 60. We're going to sell next year. We'll probably make about 60 or 70,000.
What are you selling?
Her house.
Our house.
Oh, okay.
Yeah, and we don't have a plan to actually buy anything right away. How does capital gains fit into that?
Oh, we're going to make you so happy. Chris, tell her.
Well, since you're married, you can make up to a $500,000 profit, and
For free.
For free, and you lived there 2 out of the last 5 years, right?
Yeah.
Okay, so it's totally tax-free, and you don't even have to reinvest it into a new house.
You and your husband can be wild and crazy, go across the world and have a whirlwind vacation and never reinvest the gain, and it's okay.
Even though it's our second house we sold?
You can do this every 2 years. Buy a house, live in it for 2 years, sell it, exclude up to $500,000. Buy another house, live in it, decorate it, sell it, exclude up to $500,000, and do that all the time. Or you don't have to. You can just buy it, sell it, exclude up to $500,000, and go do something crazy.
Okay, because somebody told us we would have to pay 33%.
No, they were wrong.
Oh, my gosh. All right. Thank you so much.
All right, Deb.
Okay.
Have a great day.
Thank
Stay
you.
warm.
Thank you.
Bye-bye. It's so cold out there.
It's amazing how many people still go back to the old law, which was changed in May of 1998.
It's so remarkable because, most of the time you can't get people to ever get anything right about taxes. And then that thing has been changed how many years ago, and people still go back,
Yeah.
I got to reinvest the gain. I'm over age 55. Nope, that's not true anymore. So it's wonderful. If you have a home and you lived in it 2 out of the last 5 years, and the reason they put the 5 years in there, like let's say 5 years ago it was your personal home, then for 2 years you went to Florida, then 4 years ago you lived in it as your personal home, and this is the 5th year, and you say, now I'm going to move to Florida, you can exclude the whole game.
If we were in a good housing market, or if you knew how to buy houses and fix them up,
And
you
flip
could
them.
live off of it.
That's you really
pay no
If
taxes.
you had like a decorating savvy, like I like to do. Chris knows. They call
Hildy
They call
Goulias.
me Hildy. All right, we're going to go back to the phones, and we're going to talk to Ed from Cheektowaga. Hey, Ed, how can we help you?
I was just wondering, I had a woman who lived with me for the whole year. She has no income, didn't work at any point during the year. She is on Medicaid, but that's about it.
Okay, how much money does she get, Ed, from her Medicaid? Like $800
I
a
don't
month?
know. Oh, heck
Oh,
no.
Medicaid is an insurance program.
Medicaid's insurance.
All right, so she doesn't get any
about-
Social Security?
No.
Nothing. All right, so if she lived,
No.
all right, so here's it. If she didn't have taxable income over $3,900, she lived in your house for the entire year, she's not filing a joint return, she's a citizen of the United States and a resident of your home, she's your dependent and you get to claim her.
You just made my day.
Thanks, Ed.
Thank you.
Bye-bye.
Bye.
I'm Esther Goulias, the tax lady. We're going to break for news. See you on the other side. Call us at 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side. Esther Goulias, the tax lady, and I'm going to tell you, outside our studios here on WBEN, I don't want. Would somebody please come pick me up? Because I do not want to go outside in that bad, nasty snow. It looks terrible, Chris.
Yeah, I know. I just said stop shaking the snow globe.
Boy,
I'm done.
Telling you. I'm Esther Goulias, the tax lady from EG Tax. Now, all of our offices are open this week from 9 to 9. You want to talk to a real person. We will help you like a real person. It's just frustrating as all get out. All you get is numbers and leave an email and we'll write you back and fax you and and by the way, but speaking of that, if you want to go to our website, you want to email me, I will personally answer your tax questions 24 hours a day. Sometimes in the middle of the night I get up and I answer my emails and people go, "Oh my God, I can't believe you answer those at 2 a.m. I get up, I answer the emails because they're on my cell phone. So I'm Esther Goulias, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Jackie in Niagara Falls. Hey, Jack, how can we help you?
Yes, hi, Esther. I have a niece who lives with me, and I support her.
Okay.
Now with the new, she's on Medicaid, the health insurance. Mm-hmm. Will we still be able to claim her?
Okay, so really the health insurance has nothing to do with whether, how old is she?
She's 4.
Now, do you have physical custody of her, court ordered?
No.
All right.
Her mother lives with us too.
All right.
She lost her job. She has no money.
All right. So did the mother make any? Jackie, did the mother make any money last year?
No.
None.
Nothing.
How long did the mother live with you?
It's going on 2 years.
Did you claim her before?
Yes. Not the mother, just the daughter.
Why didn't you claim the mother?
Well, see, I can't get an answer out of her. I don't know if she owes the IRS money, and I didn't know if that would affect us, so I didn't claim
it doesn't.
her.
All right, so here's the thing. Is this your sister that's living?
Yes.
So it's your sister and her baby, right?
Yes.
And your sister's not working.
Right.
Okay, so your sister is your qualifying. How old is she?
49.
All right, so she's an adult. All right, so she doesn't have income over $3,900.
Correct.
She lived in your house all year. She's not
Correct.
filing a joint return, and she's relative. Okay, so you can claim your sister and the baby on your tax return.
Okay.
Now,
So
how much do you and your husband work?
Yes.
May I ask what your wages run approximately?
Probably between the two of us, anywhere to 80 to 90.
All right, so you're not going to get an earned income credit, but you will get the child tax credit. And so with your sister and the baby, you're going to save about $2,500 in
Easily.
taxes.
Okay, and so that won't affect us. Like I said, I can't get a straight answer if she owes the IRS.
Yeah, but you see, her being on your return really has nothing to do. This is your return. This is your dependent. If you don't owe the IRS, you're in good shape. Now, the other thing that we do as a service to the general public is if you want to help work out help your sister to work out her payment with the IRS, we have a whole department that will help you work with the Internal Revenue Service and get the debt paid. So,
and she may even.
I know, but how is she going to do that? She's got no
Well,
money.
but you see, sometimes you become uncollectible, and if the liability is long enough, they forgive the debt. So
Okay.
if that liability was more than 10 years old, they just take it off the books.
Okay.
Okay?
Now, she does have like a deferred comp thing, but she can't touch it. She can't get it.
Yep,
Would that
nothing.
affect anything?
Nope. And she's not disabled or anything?
No.
Why does she not work?
Well, she lost her job. She tried for disability. She got denied, and she's got nothing. I mean, no
But
car,
why-
no vehicle,
Okay.
nothing to get anywhere. And we both work, and there's no one to take care of the baby.
And she's taking care of the baby, right?
Yeah.
Okay. And she didn't go to school, did she?
What do you mean?
She's not going to college.
No. She did when she was a teenager back. You know what I mean? I think.
Does she have a
had
degree?
2-3 years. No, she don't have a degree.
Well, I mean, what I told you is true. She's your dependent, so is the baby your dependent. It's going to save you at least $2,500 in taxes, depending upon your tax bracket. The higher your tax bracket, the more you're going to save. But I would think that you would encourage her to go get a degree so she could get a job. but and that's just on the side.
And actually, with her income or lack of income, she would probably almost go for free through financial aid.
That's true. She'd probably go to college for free. And what she'd want to do is get a job that's marketable, like nursing, something where you really get out and you really have a skill and you can get a real job. So, but yes, you're gonna. And really, we should really look at amending your 2012 return as well. Okay.
Okay, thank you, Esther.
Thank you very much. Bye-bye. Thanks for calling. I'm Esther Gulius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. This is a good day for sitting by the fire with a big hot chocolate, isn't it? With marshmallows floating on the top. And a
W-2 and your mail and trying to get your stuff in order.
That's true. That is true. And by the way, the IRS is open for business on the 31st. So if you get in this week, we got all your tax returns. We'll have them sent to the IRS. We'll be the first guys at the watering hole. So I presume the first direct deposit drop
says
will
up
be
to 21 days.
21 days and so call any of our offices. You can find out information on our website at egtax.com, or you can go to 56611EG, and it'll tell you where all of our offices are. And you can talk to people and ask questions. And we're going to talk to Deb in Tonawanda. Hey, Deb.
Hi, how are you, Esther?
Good.
I have a question for you. I've been on workman's compensation for the last 2 years due to a back injury.
Okay.
My son is 25. He does work, but he does help me out a lot. Would he be able to claim me on his taxes this year?
So workman's comp is tax-free. That's your only source of income.
That's it.
And what does it compile to? If you compile all your workers' comp for the year, what was your total?
About $12,000.
Okay. So whose house are we living in, yours or his?
Mine.
That's really a problem because effectively you're supporting him because he's living in your house. So what you have to do is
if you wanted to, as a quick claim deed, put the house in his name.
But it's too late for
last year.
It's too late
for last year, but for
that
this
would
year.
help in the future. But you really have to kind of do a support statement to see if he gave over 50% to your support. But with the offset of the house, probably, and $12,000 in income, it probably won't work. You didn't put all that money in the bank, did you?
No.
Yeah, you didn't buy a car, did you?
No.
Yeah, I mean, I would think, without doing the numbers, I would think probably not, because you're actually giving him support because he's living in your house. But what Chris says is correct. If you're still going to be on workers' comp because you're unable to work, if you did a quitclaim deed and put the house in his name, now you're living in his house, and that really makes the support better. But whether you want to do that to save $300, I don't know that you want to do that. I mean, I love my kids, but hello.
No, I wouldn't do that.
Yeah, okay. All right?
Okay, well, thank you very much.
Thanks, Deb. Have a good day. Bye. I'm Esther Gulius, the tax lady from EG Tax. We're going to go to Carolyn in Bowmansville. Hey, Carolyn.
Hi. My husband and I both have 401s and 403s.
That's great.
He has 2 and I have 1.
Great.
We are going to head to North Carolina, and our house will probably clear about $150 after it's sold. And I don't want to purchase a house and have a mortgage down there. What percent are we going to take a hit on if we take out $50,000 out of our 401s? At what tax rate?
Okay, so let me ask you this. Besides the 401ks and 403bs, do you have any other pension plan?
Yes.
Okay,
we're not old enough to retire yet.
So how much are you guys going to be getting monthly from your pensions?
Or are you still working?
We're going to work when we go down there, but I can claim my pension from my job and still work. I'm only going to get to like $600 a month.
All right, so that's $7,200 a year. And what do you think your job is going to make?
Oh, probably close to what I'm doing now. I'm a nurse.
Okay, so you'll make $70,000, $80,000?
Probably down south about 60. Yeah.
All right, and then your husband, is he going to work or is he going to loaf?
He's going to.
He's going to loaf.
He's going to work at some place like Home Depot or something.
All right, so he'll make 20, right?
Yeah.
So you guys will be at $97,000. All right. So if you take $50,000 out, you're going to pay. And don't forget, North Carolina is not so tax friendly. You might think that New York State is not tax friendly, but to retirees, New York State is. So you're going to pay about $12,500, so about $14,000 in taxes if you take $50,000 out.
But I don't want to pay a mortgage when I'm down there, so I figure if I pay cash for the house.
Okay, but something to think about is you can get mortgage. So you got, let's say, $14,000. So you got to say how much. If I got to borrow $50,000 at 3%, that's $1,500 a year, right? So $1,500 into $14,000 means that you could do 9 years. You could do Carolyn, a 10-year mortgage.
Okay.
And pay very little interest. Still have all your money on your 401k plan. Deduct the interest and still be whole. I know you don't want a mortgage. And remember, you can always take the money out of your 401k. You can always do that and pay it off. But I would go down there and see if with working that it wouldn't be a good thing, because the interest is very little. It's $1,500 a year.
Yeah. And the taxes are like, I pay like $5,500 a year.
I know. I mean, the property taxes
$1,100.
But y'all know you're gonna have to talk like this here. Y'all know that.
No, I would never talk like that. Thank you very much.
All right. Have a great time, Carolyn.
Thank you.
Thanks
so much.
for calling. I'm Esther Gulius, the tax lady. We're going to take a short break. Join you on the other side. 803-0930. Star 930 on a cell phone. Talk to you later. Hey, it's Esther Gulius, the tax lady. We have about 12 minutes left in the show. And I'm going to tell you, the show goes on because you can call us at EG Tax at our corporate headquarters, 632-7886, pretty much 9 to 9 Monday through Friday. 9
and 9 to 9 on Saturday next week, too.
You can email us at egtax.com. Any of our 28 area offices, you can call, and there's a real person to talk to. Especially this week as we're gearing up. I think by Wednesday or Thursday we're going to be very busy, but probably Monday and Tuesday we'll still have people able to answer your questions.
If you're one of the people that only have Sundays off and you're looking for a place to get your taxes done, our McKinley Mall office is open on Sundays too. So
right, and it's inside, which is nice. All right, I'm going to go back to the phones and talk to Larry in Buffalo. Hey, Larry.
Yes, sir. How are you?
I'm good. What can we do for you?
Hopefully a simple question for you.
Yeah.
I purchased a new car in 2013. Is the sales tax on that deductible in any way?
Make Larry happy.
You purchased it in the right year. Yes, it is, because in 2014 it goes away. So, yep, you can take that sales tax and try to use it if it's better than your state withholding, add it to your chart, and then you'll be able to use that as your itemized deduction.
So let me explain. It's an itemized deduction if you're an itemizer, okay? You compare your state income tax that's been withheld or paid in through estimates against your sales tax. Now, the sales tax chart is very tricky because they use a 4% chart figure when you're looking in the publications, but we live in an 8.75% or 8% county around this area. So you have to take the sales tax chart figure based upon your income, double it 4.75%, and then to that you can add your car. So, and then you compare that to your state withholding to see whichever is better. But this is the last year. It dried up December 31st.
Can I elaborate just a bit more,
Sure.
if I may?
Sure.
The income that I do have, or did have for 2013, was Social Security, and I took some money from my teacher's pension.
Okay.
I took a cash settlement on that when they withheld, roughly $7,000 or $8,000 on that.
Okay.
And that would be the only income that I guess I would end up showing.
All right. So for sure you paid no state taxes, right?
Correct.
All right. So for sure the sales tax is going to work. Do you own a home?
I do.
All right. And did you have? All right. So approximately, what's your house payment?
Well, it's I paid for it. I used that money that I took out of the retirement.
Okay, so how much are your property taxes?
About $3,000, $2,500.
Okay, and you must have paid some interest before you paid it off, right?
That's correct. A rather minuscule amount, perhaps a few $100s.
Okay, and then do you give charitable contributions?
As much as anyone, yes.
Okay, so how much is that?
Perhaps a few $100 a year.
Okay, so we're up to like 4, and your sales tax is maybe 2, so that's 6. Are you single or married?
I'm married.
Okay, and your age?
64.
Does your wife work?
She does not.
Okay, so it sounds like you're a non-itemizer. Did you have large medical bills?
No, I am an itemizer, and I have no medical bills.
You are an itemizer?
Yeah, I have some property that...
okay, great. All right, so you're definitely going to be able to use your sales tax.
Oh, wonderful.
Okay?
Well, that's great news, guys. Thanks much.
Thanks, Larry. Bye-bye. Let's see. We're going to go to Steve in Grand Island. Hey, Steve.
Hi, Esther. Thanks for doing your show.
Thank you.
How do I go about getting an appointment with you personally?
Well, you just have to call me.
Okay.
Call me.
Call our office at 632-7886.
And I'll be honored to take care of you.
And you just say you want an appointment.
Just say, I want to see Esther. And
Right.
you'll see me. I don't know if you're going to want to see me anymore. Oh, my God, I got to see Esther. No, I love my clients, and we have a great time together. So
What's the
just
number again?
632-7886.
7886.
Right.
Thank
And actually,
you
if you
very
call right now, Leah's there, and she can make the appointment.
Yep.
Okay?
Great.
So I get to meet you later then, right, Steve?
Let's hope so.
All right. Thank you, sir. Bye-bye. Let's see. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we have Sandra. Hey, Sandra, how can we help you?
Hi, how are you?
Great.
I love your show.
Thank you.
I am a single parent.
Okay.
I have sole custody of my daughter.
Okay.
And when I filed my taxes last year, I was unable to file for my daughter. They told me I couldn't do it.
Why?
So, because I don't know, somebody else claimed her.
Okay, so probably the ex claimed her.
All right. So did
Probably.
you work last year, Sandra, in 2012?
No, I don't do earned income credit. I'm on Social Security disability.
All right. So, Sandra, you don't have to file.
I file because I'm in school full time.
All right. So you get the refundable credit.
Right.
Okay.
But I still use her. I mean, I get money for her.
You would get $100. How
All right,
old
you'll-
is she?
Well, she's only 9.
Okay.
All right. So you're going to get on the state of New York. You're going to get the $100.
Yep.
And then you're going to you're in college, full-time student,
Correct.
undergraduate.
Yes.
So you get the American Opportunity Tax Credit. So that's $1,000, and you're going to get like $400 on the state. So
Right.
so really what you're missing then is on the state of New York. You're missing the refundable child tax credit. So
Right.
just do a paper New York State return and amend it, and then they'll send you the money back.
Even though he claimed her, I
Yes.
wrote a
All right.
letter
So
to the
no, writing letters. I'm going to tell you, they only understand tax lingo. So when you talk to them, you have to talk to them in a language they understand. They understand forms. Okay. The form you write to them is a 1040X. To the state of New York, it's an IT 201X. All right.
Okay.
And so what you're going to do is you're going to put your daughter down on the federal, put your daughter down on the state, because they're going to make sure that the two equal. It won't change the federal at all, but it'll change the state. And then you're under the explanation, you're going to say non-custodial parent claimed in error, it's my exemption, and then the state's going to send you back the $100.
Okay. But what if he claimed the earned income credit for her for last year?
Well, then what you need to do is have a serious conversation with the fraud department at the Internal Revenue Service.
I did. I wrote them that form, and I have not heard anything.
Well, they won't let you know about any dealings that they have with another taxpayer because it's confidential.
Okay.
So, but you just keep, and for anyone listening, because of electronics, the first person that files using anybody's Social Security number. So if a Social Security number has been accepted by the IRS, no other people can file using that same Social Security number electronically. However, you can file a return the old-fashioned way, paper. So for those of you who have spouses, ex-spouses, boyfriends, or whoever that are using your dependents or your Social Security number incorrectly, you file the correct return. You send it in via paper. The IRS will then contact you later, and they will give you your money, and then at that point in time, they launch an investigation to find out why the other person used the Social Security number or dependent, and then they would take whatever punitive steps are necessary. Okay?
Thank you so much. You've been very helpful.
All right. Thanks, Sandra.
I appreciate it. Bye-bye.
Bye-bye. I mean, that happens all the time. As a matter of fact, I had a client today who said, my boyfriend wants the earned income credit, and which means he's going to cheat. The baby lives with her. And so she says, I'm so afraid that, he's going to file this week too, and that who's going to get the thing processed first. I know it becomes a pain in the neck, but the first person to the IRS electronically is the one who's going to more or less at that point in time win the electronics game. But later on, you can go back and file a paper.
Didn't you have a client, 6 years in a row? The ex-wife claimed the child when she shouldn't have.
That's right, and he had it in the divorce decree. And every year we went through this, every year. And it was a pain in the keister, but we always got him his money.
Yep.
But it was not easy, but we got him his money. And it just becomes very frustrating. But the worst thing you can do is just give up. And if there's people out there, if you have children that had situations like this or your own situation, and you say, oh, cripe, I have to hurry up and file because he's going to get it or she's going to do it, you have remedy. You just filed the tax return using paper, the old-fashioned 1040, mail it in, certified mail, and at that point in time, you have an opportunity to go to the IRS because they're going to say, why was this child here? This child's claimed here. And then they ask both parents to prove that the child's living in the house. If he or she took that child and it was not theirs to take, then what can happen, Chris?
Then you got to pay it back.
Well, and then what can he do if he got the earned income credit? He has up to a 10-year penalty.
You lose it up for 10 years, that's for sure. That's right. I mean, it's not a thing to take lightly. It can be very costly.
That's right. So not to give up hope and don't just say, oh, I'm not going to do it. It's too hard. The hard thing is if you don't go after these people, they're going to keep doing it because really you're enabling them if you don't dig your heels in the sand and say, I'm not going to allow this to happen anymore. All right. So that's my preaching for today. I'm Esther Gulias, the tax lady. If you need tax help, that's what we do. We want to help you. If you need help with Obamacare, we just had a lady that was in the other day. I was at a restaurant, and she says, oh, I don't think I can afford my insurance here, even though my employer's helping me. So we came in. She had more than 9.5% of her wages went to her health insurance, so it was an exception, so she could go to the exchange.
Yep.
She's saving $200 a month. And so we're so happy to help people. So, and because Obamacare is in the tax law, we want to make sure that we aren't the ones telling you, oh, by the way, you have a penalty next year. So we want to be proactive and make sure that we get you all set. But during the week, if you need anything, egtax.com, you can answer tax questions. You can go to 56611EG. That'll list all of our offices and where everybody is. And we're there to help you.
We got our apps on on iPhones and Android.
Right.
You
and
can
we
find
want
us on Facebook.
And Steve says you have to like us.
Like us on Facebook.
Like us on Facebook. It would make Steve Jacobson so happy. Until next week, I'm Esther Gulias, the tax lady. I'll talk to you next week. Bye-bye.